Welcome back to Investing Talk podcast. Today, we're zeroing in on Barrick Gold, based on those recent reports and analyses you shared. Our goal here is really to pull out the key information, figure out what it means for you, the listener, and find the really interesting bits in these sources. You wanted something quick, but thorough without getting bogged down. So that's what we'll aim for.
Sounds good. We've got financials, business factors, some management insights, and recent market stuff on Barrick. Looks like a pretty full picture, so let's unpack it and see what jumps out.
Okay, let's kick off with their financial performance. Looking at 2024, the reports suggest a strong year. Specific revenue numbers weren't right there, but the jump in net earnings and operating cash flow is, well, it's hard to miss.
It really is. That 51% increase in adjusted net earnings,
Yeah.
that's quite something. And digging a bit deeper, it looked like better efficiency at some key mines was a big part of that. Shows good cost control.
Mm-hmm.
And then you pair that with the free cash flow more than doubling to, what was it, $1.32 billion. That really highlights their ability to generate cash.
Right. And that free cash flow figure, that's so important for investors, isn't it? That's the cash left over after everything.
It is. It's the money they can use for dividends or buying back shares or funding those big projects we'll probably talk about. It directly impacts potential returns.
Absolutely. And they make a point of mentioning a strong balance sheet, very low net debt. In today's environment, that kind of financial stability must be quite comforting.
Oh, definitely. Mining is capital intensive, so low net debt gives them a real edge. It provides a cushion, sure, but also flexibility. They could maybe snap up an opportunity or push harder on development if they wanted to.
Good point.
And then there's the price to earnings ratio, around 15.15. It gives you a sense of how the market values their earnings right now.
Okay, so what does that PE tell us in context?
Well, for a gold miner, that might suggest it's reasonably valued. But, given their growth plans and these tier one assets they talk about, you'd want to compare it to peers, maybe their own history, to see if there's maybe some hidden value there or if it's just about right.
That makes sense looking at the industry picture. And we shouldn't overlook the dividend. Looks consistent at about 40 cents per share annually, paid quarterly.
That consistency shows a real commitment to shareholder returns, paying out cash regularly.
So strong cash flow, solid balance sheet, consistent dividend. Seems like a decent foundation.
Taken together, yes. For someone
Sure.
looking for maybe a mix of potential growth and income, it could be quite attractive.
Okay, let's shift gears to their business strength. This term tier one gold mines keeps popping up. What does that actually mean for an investor? Why is it significant?
Right. So tier one isn't just jargon. It generally means mines that are large scale, have a long life ahead of them, and crucially produce gold at a relatively low cost.
Yeah.
Having a portfolio stacked with those suggests Barrick has a genuine cost advantage. They're efficient.
Got it. Low costs are always good, especially when gold prices fluctuate. And the reports do position them as a leader, not just big, but operationally efficient.
And something that stands out is how they talk about replacing the gold they mine through their own exploration, finding new reserves. They seem to be expanding their asset base organically, finding it themselves, rather than just buying out competitors like, say, Newmont has done recently.
So growing from within, essentially.
Pretty much. It can be seen as maybe a more sustainable, perhaps less risky way to grow than integrating huge, complex mergers. Plus, their mines are spread out across different continents. That diversification helps buffer against regional problems, like that temporary shutdown in Mali.
That diversification point is key, especially seeing it play out with the Mali situation. A good real-world example of risk mitigation.
Exactly.
Okay, speaking of growth, what's driving it? Beyond the obvious factor of, higher demand for gold with all the geopolitical uncertainty.
Well, that uncertainty definitely helps the whole sector. Gold is a safe haven asset, that whole narrative. But specifically for Barrick, they've stated this ambitious goal: a 30% increase in gold equivalent production by the end of the decade.
30%. That's a big target. Signals a lot of confidence.
It does, and they point to specific projects to get them there.
Right, like the Reko Diq project in Pakistan. That seems to be a really major piece of their long-term puzzle.
It's huge, massive scale, very long-term potential. Production isn't expected until, late 2028?
So still a ways off.
Still a ways off, but it represents a potentially massive value driver down the road. And they've just brought Fluor on board as the main engineering and construction partner, with major work starting next year. So it's moving forward.
Okay, so that's one to watch for the long haul. And there was also mention of the Lumwana super pit expansion.
Correct. Another significant project aimed at boosting future production. These big projects show they're actively investing to grow their output significantly in the coming years, More output could mean more revenue, better profits, hopefully.
Of course, we need to look at the other side, too. What about the risks and challenges highlighted in these sources?
Well, the usual suspects for mining are there. Regulatory issues, environmental concerns. These are always part of the landscape. And naturally, the price of gold itself, it fluctuates, and that directly impacts their bottom line.
hmm And that temporary shutdown at the Lulugunkoto mine in Mali really jumps out as a specific current risk.
It does. A suspension like that, even if temporary, isn't minor. It can hit their production numbers in the short term. It can also, make investors a bit nervous. It's definitely something you'd want to monitor closely, see how it gets resolved.
Understood. And it highlights those geopolitical risks you mentioned earlier. Interestingly, the reports also noted Barrick is actively managing supply chain risks, renegotiating contracts and things like that.
Which is a good practice. It shows they're trying to be proactive about potential disruptions.
Yeah.
But yeah, all these the geopolitics, regulations, commodity prices, they underline just how complex running a global mining operation is. Lots of moving parts.
Okay, let's pivot to market sentiment. Barrick's stock price seems to have had a good run recently.
It has. Looking at the numbers, it closed around $20.59 on April 11th, up from about $18.16 not long before.
What's behind that move?
Seems like a mix of things. Analyst outlooks have become more positive. That helps. And again, the broader geopolitical climate tends to make gold more attractive, which generally lifts gold miners' stocks.
So, company specifics and wider market trends working together. And you mentioned analysts revising targets upward. National banks setting a C35 target? That sounds quite bullish.
It does. Those higher targets suggest analysts expect better results or see more value based on future growth. And speaking of results, their Q1 2025 earnings report is coming up on May 7th. The CEO is doing a live presentation too.
Right, that'll be a key date for investors, a chance to get the latest updates directly from management.
Definitely one to mark on the calendar.
Now, what about the leadership? CEO Mark Bristow gets mentioned as being key to driving growth.
Strong leadership is always important, especially in executing big strategies like Barrick has. The market often pays close attention to how confident they are in the CEO's ability to deliver on those growth plans.
And the reports also mention strategic share buybacks. What does that signal?
Usually, share buybacks suggest management thinks the stock is undervalued. It's a way of investing in their own company. Plus, by reducing the number of shares out there, it can boost earnings per share. It's another form of returning value to shareholders.
So, a sign of confidence in their own valuation. And tying it together, the overall strategy seems focused on that organic growth, using their existing assets, developing these key projects, rather than, say, chasing big mergers or issuing lots of new stock.
Exactly. That organic approach can often be more efficient, less dilutive for existing shareholders. It suggests they believe they have plenty of growth potential already within their own pipeline and portfolio.
Okay, so pulling all this together from the sources, what are the main takeaways for someone trying to understand Barrick Gold right now?
Well, I think the picture that emerges is a company in a pretty strong financial spot, good cash flow, manageable debt. And they have significant growth potential lined up, especially with projects like Reko Diq, helped by favorable market conditions for gold currently.
Mm-hmm. Those jumps in free cash flow and adjusted earnings really stand out.
They do, but you have to balance that with the risks. The Mali situation is a clear reminder of the geopolitical challenges inherent in this business. That's always something to keep an eye on.
Right. So strengths and growth potential, but definite risks to be aware of. And that focus on organic growth, developing their own projects like Reko Diq, seems really core to their long-term plan. Potential for big returns there, eventually.
Seems to be the strategy. And the recent analyst upgrades and stock price movement reflect that optimism in the market, at least for now.
So this gives us a solid overview based on the information provided.
It does. It provides a good foundation. But as always, digging deeper into those specific risks, maybe listening in on that upcoming earnings call, or getting more detail on those Tier 1 assets could offer even more insight for anyone seriously considering an investment.
Good points. We hope this breakdown has helped provide a clear and engaging grasp of the key points from the sources you shared. If you found this valuable, please do subscribe, like, and comment. It really helps us create more of these focused analyses. Thanks for joining us.